short supply. Actually, there's a bit more plentiful supply of things around today. We need to keep delivering those projects. So that's the good news. What's the sort of bad news? I see two problems on the horizon. Kind of, I've put them in three. But clearly, world economic growth is a concern, and I'll talk about that in a minute. The other one, though, that concerns me as much is the bank deleveraging. Unfortunately, we still are fairly early in the game in terms of bank deleveraging. And the follow-on of that is there's a lot of people who borrowed money in 05 and 06 who borrowed for 3 or 5 year terms who are going to have problems refinancing some of that debt. So I think those are the two things that are going to slow us down. Having said that, if you're a bit cynical, it's funny, The Economist the other week ran The Economist of all publications is, supposed to be for economists, and they were questioning the value of any of the economics of the last 30 years. I'm more optimistic than they are, but, it's interesting with the forecasts. The forecasts kind of, they continually look at current data to keep adjusting, maybe to retriangulate. So the IMF is saying, they're saying we had growth last year. It's interesting, it's still a forecast 6 months later. They're saying 2.5% drop in the world's economy. This actually shows the constituent parts. But every kind of month or two, they're actually revising that up. So it's less of a drop because they're seeing more good things happening, so-called green shoots. So I do think this is still the risk, though. Clearly, we can't keep having declining traffic at airports or declining traffic on roads if we're going to see growth in the industry. The other one is the deleveraging. This is a little bit scary, but the world might be a bit better than this shows. About 3 months ago, the IMF predicted that there could be about $2.7 trillion in write-downs from bank balance sheets. Staggering number. If you look, the banks of the world, the major banks of the world, have lost about $1.4 trillion. So if they're right, we're only halfway through the need to delever and raise capital. So banks, back to my earlier point, banks are going to be out raising a pile of money around the world. That's for sure. The question is, how many bad debts are they going to have? How many loan write-offs are they going to have? One of the things we see a lot of at the moment, we're helping a lot of companies refinance, good underlying businesses. The problem they have has nothing to do with the quality of their business. It's got everything to do with how much money there is available. And so in this market, we've seen a bunch of banks pull out. There is just less money around. Unfortunate but true, and I don't see that stopping for a while. As I said, it's amazing at $1.4 trillion to think there's more to go. The one sort of saving grace, if the economy bounces back sooner, the bad debt write-offs that are coming will be smaller, and that'll put less pressure on the banks. So just to finish up, what do we think might, the net result of all of this? Well, I think you're going to see a couple of things. I think we are going to see, and we have seen, a bit of a rebalancing in some of the risk-reward equation in the private infrastructure. So we've seen equity returns go a little bit higher. We've seen debt returns go a little bit higher. I think it's all, but it is all at the margin. It's all evolution. As I say, I've been involved in projects, way back to M2 and things like that. The world has always moved on in our sector. It's a relatively young business, but I think we'll continue to see more of that. What you will likely see is more equity invested. This is a Infrastructure Journal averaged how much equity was in projects looking back over the last 5 years. What's interesting, it was very stable in 05, 06, 07, 16, 17%. Last year it jumped to 27%. Seems like a big jump. My guess is it's going to go slightly higher. Basically there's less bank debt. But you go back to my earlier slides, I think there's still quite a bit of equity in the world. And so, we'll just invest a little more equity. It'll be a bit more expensive. Pushes up the overall cost of the project a bit. But frankly, in 2007, I think the balance got skewed a little bit too much. My final comment, are we headed for 2002? I sort of wake up many mornings and try to think about where the world's going. My take is 2002. I just picked the year, but it's sort of good. I think 2002 was about a balanced year. The kind of risk-reward was about balanced. Bank pricing was about balanced. Equity returns were about balanced. Basically for the next 5 years, debt pricing went down. Equity returns went down. They all of a sudden now rocketed back up, particularly the bank side rocketed back up. It's rocketed back too far. I sort of think that might be where we're headed, but, it's just a guess from me. Anyway, thank you very much.